This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro. So today I want to go back and reference my book and talk about something that I think is pretty critical because, as you know, I like to use two time frames in trading. Now, there are times when I'll use a single time frame. That's usually when I'm looking at a breakout trade where I have low ADX and a stock has been doing nothing for a while. And if it breaks out of a sideways line, an area that where it had continued to pop up against a specific level, and it can't get through it, then it breaks out. But I want to take that breakout. But on the pullback trade, there are two different versions of that, and I do talk about it in the book, but it's not something that I've done on a video, at least not extensively. So I want to talk about that today. I think it's pretty critical when you're looking at the difference between a turnaround trade and the beginning of a trend versus something that's in an ongoing trend. So let's go ahead and get into this right now. This is I think the basis of the two time frame pattern. And I think I like to use this graphic because I think if you understand this, then you have the background that you need to be successful using two time frames. Now, in terms of looking at the nitty gritty and knowing what you're looking for at the trend line breaks or the reversal points, that's a different story. That takes a little bit more work. And that's why I do so many of these videos on this. But the blue line here is referencing the higher time frame. And what I wanted to point out that I think is important is if you notice, we've got this pattern where, and you could almost look at this like an 18-month moving average, the blue line, and say, if this line's starting to cup around and hold price as it's starting to turn to the upside, we could look for a breakout pattern to develop or a reversal pattern to develop on the lower time frame. When we've got this support from the 18-month for the first time. And you could view this as a stock that's been going down and down and down, and now all of a sudden it's formed a base and it's starting to turn around. This is a very powerful pattern. I'm going to give you an example of this, and then I'm going to give you an example of this in a second. So the second pattern is where we have an ongoing trend. And usually what I'll say is that we've got the rising 18-month, but we also have a rising 40-month underneath, and they almost look parallel. That's usually the strongest pattern. And the ADX will typically be in a pretty good position as well. It won't necessarily be above 25 during the pullback, but it will have made a very strong peak prior to the pullback. And then during this period down here, the ADX could be low. And in most cases, it will be. So you want to understand that the higher time frame won't always have strong ADX in place, especially when we're looking at a turnaround pattern. Let's just break this down and look at two things. So one is the 18-month on the higher time frame is falling, but now all of a sudden it starts to flatten out and price starts to respect it. So that's version one. And again, both of these are in my book. I talk about this pattern where we had a declining 18-month and now it's starting to flatten. This is an early turn type of a situation. Now, on the smaller time frame, we could have either one of these taking place where we get an opposing trend pattern set up, or we could have a low ADX pattern setting up in this situation. But we have a turnaround taking place as opposed to an ongoing trend. Now, on the other side, we've got a strong ADX situation taking place where the 18-month is rising. And again, usually you have a rising 40-month that'll look almost parallel. But we've already made a decent move, and now we're consolidating back. That consolidation could look either one of these. It could be an 1840 opposing trend trigger where we get an ABC down and the 18 crosses down below the 40, or at least the 18 meets up with the 40. And then the other version is a low ADX sideways consolidation pattern, and you're looking for a breakout from that. So both on the lower time frame, either one of these could take place in either one of these situations on the higher time frame. We need to know, we need to be on the lookout for this pattern too. Don't just look for this pattern. If we go through an extended decline in the stock market, where we actually go through some kind of a bear market or something like that, this is going to be the premier pattern we're going to want to look for. And I love this pattern in the right condition because it's the start of a trend, and you can get in one of these. If you find this with the right combination up here, you could get in and be in for 2 or 3 years if you manage it correctly. So I wanted to make sure I covered those with graphics. Now, let's go ahead and look at a couple examples. So if we start with silica, which I did mention in the video last week, we had a declining 18-month, long period of decline, and then all of a sudden we're starting to respect it on the pullback. Yeah, we have low ADX in place. We don't really have a condition of ADX that's telling us the trend has turned yet, but we have this long extended decline period, and now we're starting to hold this line for the first time. Now, that's not enough to buy. We need to have the lower time frame give us some kind of a signal. Now, in this case, we had a low ADX pattern, and we could have played this as a breakout play like this. Because it was going sideways, because we had low ADX, because green was above red, you could have bought the breakout pattern. Now, there's nothing wrong with letting this break out and then look to buy the first pullback, or maybe even go down to the daily chart and look for an entry using that. The other way, I guess you could have looked at this as an opposing trend pattern. And the way you would do that is this went into the zone and then came out. Okay, and tested this low. And then as it came back up through and crossed back above the 40, you would have considered getting long right here. Now, when you do that, you put your stop. You can put your stop underneath here. And more conservatively, you could use this big major bottom. If you use this big major bottom, you're very rarely going to get stopped out. But you obviously need a lot more upside in order to make up the difference of the risk that you made. If you do this trade here, using this stop and give it a little bit of room below that, then I think you have a pretty good chance, and the risk reward will work pretty favorably for you, where you could be pretty much taking profits as you're testing this high, and scale and trail like I like to do, as I've mentioned in numerous videos. So that's one version there. Now, the other one is the Alcoa, and I'm going to use the weekly chart in this instance as the higher time frame. And notice how we have this parallel nature. We had the turnaround pattern. We broke out, pulled back, but then we get look at these pullbacks to a rising 18-month and week, and notice how the 18 and the 40 week are about parallel. So in this case, you'd go down to a daily chart and look for your opposing trend trigger, where the 18 crosses down below the 40, and then we look for a move back to the upside or a zero line reversal. So these are the kinds of patterns you want to be on the lookout for when we have the higher time frame moving up with a good ADX condition, but mainly when we have the 18 and the 40 trending in a very strong way. So those are the two different versions of the trade, the pullback trade, that I discussed in my book. And I do numerous videos on this, but I spend most of my time showing you just the pullback trade in a rising environment. But we can definitely look for the situation in a reversal pattern that takes place in something like silica, where we've gotten this 18-month to finally turn around. Now, this could be an 18-week too, or an 18-day. You can do these in any time frame, but I'm using this as an example of a big turnaround pattern, and then we go to the smaller time frame weekly for our entry. So hopefully this makes sense to you. Go ahead and post any questions or comments. We'll see you next time.